24.5% drop in annual diluted headline earnings per share, again referring to impairments on the retail front peaking 2009, but the commercial impairments not peaking yet. And isn't that an area of concern?
Absolutely. Evening, Bronwyn. Look, I think in line with guidance, no real surprises reflected in the share price, flat on the day. I think the retailer is not as under pressure as it was, with interest rates possibly staying flat for the time being. The retail side is picking up, is what you'd expect. But commercial lending alluding to the fact that looking forward, that as we all see, the transparency is still not quite there for the corporate side.
If you were to judge the banks on their management team, where would you be placing your bets?
Look, I think
you weren't expecting that one, were you?
No, I wasn't. Thank you for that. I think ABSA are still, they're quite let's say a youngish side with regards to certainly with the banking experience. Look, a hell of a lot of experience, but not much on the banking side. So I guess just watch them with caution. I mean, obviously in that space, I think people still prefer the likes of a Standard Bank and certainly with a team that's been so sort of close knit together. So I think they've got a lot to prove to shareholders, and certainly that share price around 130 to 133. I think it's been like that for quite a few months. So I think let's see what they've got to prove.
Well, technically, a minute ago, Mashima was saying that the banks have run relatively hard to this point, and that on the upside front, maybe 15%, but they're going to go sideways for quite some time.
Yeah, you do get that feeling that a lot of the good news or a lot of the guidance is in the price. I guess we'd like to see sort of maybe some at least some more dividend flows coming through, money returned to shareholders, maybe a little bit of corporate activity in that space. But at the moment, it seems difficult, Bronwyn, to see what's going to take it up to that next level.
The resources and what's happening on that front. Again, it's the volatility that's made it so difficult to judge which direction we're going to see. And again, you don't even need to look at the small and mid-tier stocks for the type of volatility that you're seeing on the JSE or share.
I know, we sit here sort of week in and week out having the same conversation about volatility, but it really is the theme that's been the start of this year, and it continues. Again, 4-5% moves. Anglo-American, I think over 2% again today. Parla Platinum, big moves. Amplat's down. Gold shares today, sort of flavour of the month. So Anglo Gold up about, I think, 2.5-3% again. So the volatility continues, but a lot of it driven specifically on what's happening in the euro dollar. Yesterday we saw a lot of holidays, President's Day in America, bit of a subdued, low volume day, but huge moves to the upside. As soon as we had the euro landing on back and trading again, the volatility is continuing.
If it all depends on the direction of the euro dollar at the moment, where are your currency strategists thinking that the euro dollar is headed?
Well, it just feels it's not only the euro dollar; it's also everyone's watching these bond spreads as well. These spreads in the euro land, the Greek bond spreads. I think they went out about 25-26 basis points today. Normally, when those bond spreads go out, it means that the euro is going to be a little under pressure. The dollar is going to strengthen, that should pressure on commodities. So we're still seeing that a little bit of nervousness still there. I think most strategists would have said that the euro was oversold due a little bounce, but it almost feels like we're going to have the same conversation next Tuesday. Where these things are going to go. We're still looking for direction out of the European finance ministers. Still didn't get any. They said they're going to meet in a month's time. It's not what the market wants to see. It's more uncertainty.
John Malden made the point in his weekly paper, The Frontline. He's obviously a prominent market commentator, that the Greece situation Greece may contribute only 2.7% of Eurozone GDP. But Bear Stearns only had exposure to around about 2% of US banking assets. And he cautions on the contagion front that Greece is a precursor to an era of sovereign risk.
Probably interesting, but also doesn't it test the whole sort of one Europe theory? One thing you don't want is you're supposed to have these strict fiscal and sort of policies in place. You're supposed to have your banding in place. You know exactly where you stand relative to your debt to GDP. It's sort of, I think they're sort of stuck between a rock and a hard place, because if the IMF or someone else or certainly Germany or France or someone decides to bail out Greece, well, it might be small, but it sets a precedent. Then what happens when Spain says, what about me? Spain is 4 times bigger than Greece. Certainly the likes of Ireland getting things back in place. But where does this all stop? I think you're setting a bad precedent. And it's certainly all those Eurosceptics, this is just absolute music to the ears.